General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.4.1 Disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, so let's knock out the chart work. It's the middle of the week, or the midweek review day. I'm kind of thinking Monday's still going to be the low. We had a nice retracement of this order block, but 618, the golden ratio, we got this nice wick zone. It'd be nice to buy, target previous month's high because it is a new month. Weekly bias template is still bullish. Note shoot the framework hit rate. Hit rate's been better since I stopped looking for the absolute apex entry. No case studies. This is previous month's range. This is basically just July's first price action in the H4. Back to previous week's EQ. First day of the month, this looks like a Judas to accumulate more buy orders. True. Expansion mitigation signals previous week's low and previous week's high. Should be. It's in touch. Expansion to the upside and retracement so far. Precision quality, high probability versus low probability. High probability, keep it up, the ease for execution. Narrative, framework accuracy, good. We reading the ADR and value well enough to not chase the chop. Experience success / failure, showing them daily and reflecting in the journal. Case study vault reference, no case studies currently. Today is Wednesday, July 1st. It was accumulation day. I engaged, confidence level was medium. We seen the conditions and the price delivery signature. I'm still thinking Monday's the anchor. Today was not an expansion, it was more of a retracement. And I don't think we hit terminus today. So on the M15. It's at the M30 order block we traced off of 3 down days, and we spent the whole day inside of this fair value gap. So just accumulating orders. Nice retracement. We had all the news and Kevin Walsh do his press event. PMI came in lower, but still high and still over 50. And the jobs data is better than before. So all the news is coming out peachy. the H1. It don't look good at all on the H1. Two things: we can rally overnight or chop into NFP and then rally. I like the vibes from the daily fair value gap at EQ of the expansion and from the wick zone at OTE. A sell ideal would be if we close the daily fair value gap and respect it as resistance. Yeah, we have to start close through and reject to be safe to sell. Nasdaq on the daily. It's like almost too much like right just to put a wick here and rally back to this. It's like a volume imbalance or a new day opening gap. The VI left from the new day opening gap would be a nice target after we pair orders in the FEG. And SPX much stronger here because we didn't push down as far. But we did kind of leave a little. We can come here and sweep this or reject off of this. No strength is seen on SPX. We don't have as far as a drop down as we have on NASDAQ. The SPX in an hour kind of looks choppy, but we got strong expansions, choppy retracements. Strong expansion up and then been chopping for retracement. Fair value for buying is at the daily fair value gap, but this is so strong. Previous day low could trigger more buy orders, and we could never see the daily fair value gap. It is a short week due to holiday. Yeah. I think in NFP we push. We don't even really need this gap. We'll probably chop overnight though. Let's take a look at the daily on the stock chart. Nice rejection here, but very bullish price action. We don't look like we need a retracement. Bullish, and I'm thinking we're starting to get in the time of the year we can hold over the weekend. The market has had enough weekend nonsense. This looks more like an accumulation because it is a down day. Didn't sweep the high, and we're real close to that daily fair value gap. So pushing down just a little bit accomplishes taking this previous day's low and this one and touching this inefficiency before rallying. It drive people crazy just to rally and not hit it. So that'll be the ideal delivery. Daily first value gap is first here, and then it will be okay to buy. And with Wednesday being such a small range, we can take Wednesday high and low before we make the real move. That look like an accumulation candle. Structure is also still bullish. No daily lows have been taken. Okay, Nvidia had a green day, and we still got this huge gap. Green day on Nvidia, the single stock is keeping us up. Word is Burry is shorting it. He always shorting something though. It's the engagement for the day. Not Burry, Wash, and all the news came out. Rejected off this new, or not new, but opening range gap. But up the previous day's high. I was thinking we would push more around here. The ADR is kind of like at 4, and it kind of was slow for the rest of the day. What did I do? Look for buys after I seen the opening range gap fill and reject it. Did I follow the plan? Yes. If not, what caused it? Nothing. What do we do well? Execution. And what we do differently next time? Nothing. Framework played out. What did I learn about pattern narrative myself? Gotta be careful with the trading view buttons. Yeah, just because it was crazy. I was trying to partial and ended up closing the whole thing. And I tried to put my partial on here. Like, that was weird. But then they always updating, doing crazy stuff. What will I watch for tomorrow? NFP. Alright, that's all the chart work. Y'all have a good day.